Let me ask you a quick question. Have you ever applied for a business credit card, got approved, and then immediately thought, why is this credit limit so low? And then you hear about other business owners getting 50,000 or even higher credit limits, and it feels random. It's not random. Banks follow a system. And in this video, I'm going to break down the 3 biggest factors that control your credit limits, plus how to avoid the mistakes that quietly kills approvals before you even realize it. So let's get started. One of the biggest problems I see is not bad credit, it's bad applications. People apply for the wrong card with the wrong bank and the wrong order, and they don't realize the damage until it's already done. And in this video, I'll walk you through the top 3 factors banks care about most. Why sequence and card issuer selections matter more than people think, and how using a pre-qualification review and funding strategy can help you avoid the most common and expensive mistakes. So let's start with the factor that matters more than anything else: comparable credit. This first factor is the most important. Here's what this means. Before a bank gives your business a large credit limit, they want a proof that you, as an owner, can personally manage high credit limits. What they look at is your personal credit card limits, not authorized user accounts. That's number 1. They also look at how long you've had these credit cards, the types of cards that are issued. They don't look at store cards, they look at major bank card issuers. And who issued the cards, your payment history, and your credit utilization. If your largest personal credit card that you have is $5,000, the bank has no evidence you can manage $25,000 or even $50,000 credit limits, no matter how strong your income looks like. They're not judging you, they're measuring risk. So strong comparable credit includes you having personal credit card limits of $10,000 to $25,000 range, accounts that are aged more than 2 to 5 years ideally, credit utilization under 30% but under 10% is ideal, consistent on-time payments. High-limit business credit cards, just remember, there aren't starter cards. They're trust-based products. This is where mistakes happen. When you apply before the credit profile is ready, you apply for cards that don't match your credit tier that you're in, and you apply with an issuer that's known to be conservative with first-time credit limits. And once you apply incorrectly, you can't undo it. And this is exactly why our pre-qualification review becomes valuable for you. So instead of guessing, what we do is you submit a credit report to us. We look at your personal credit card limits, your utilization, your recent inquiries, and your readiness for high limit approvals. This helps you avoid applying for business credit cards you're not positioned for, which protects your profile and your approval power. If you're unsure whether your credit actually qualifies, don't apply blindly. Start with a free pre-qualification review. Just see this link right here. We do have the link in the description of this video as well. We can give you results in 24 to 48 hours. Let's talk about factor number 2, existing relationship with the bank. The second major factor is your existing relationship with a bank and that you're applying with. This one's really huge. And it's where application order really starts to matter, because banks prefer applicants that they already know. And that relationship can include, you may have had a personal credit card with that bank, a checking or savings account, a previous loan, or even a closed account with good history. When a bank already knows you, the approval's easier and limits are often higher. One of the biggest errors I see is people applying with the wrong card with the bank first. Here's why that's a problem. Some cards anchor your future credit limits. Applying for the wrong product, the wrong card, can permanently limit how high your credit limits can go up in the future with that bank. And this is why the sequence matters, the order in which you apply. And this is what we help you with our service. With our business credit card funding service, we don't just help you get approved, we help you apply in the correct order, and we do all the work. We do all the processing, we apply with the right issuer, the right business credit card at the right time, and that's how you avoid those low starting limits. If you want clarity on which banks you should apply with, and you're looking for a more definitive projection of how much you can get approved for in business credit card funding, then start with our pre-qualification review. The link is in the description. Factor number 3 is age of business. This third factor is so important because it's often misunderstood. Banks care about how long you've been in business, and most people think if I buy a shelf corp, that's all I need. No, they want to look at you as the primary owner of that business. And it's not black and white. Typically, if you're under 6 months, very conservative limits you'll get. If you're 6 to 12 months, a little bit better. 12 to 24 months, your options improve. But your stronger credit limits are for 2 years or older businesses. Okay, so, but even with lower revenue, if you have an aged business, that's good. The mistake newer businesses make is applying too aggressively and too early, especially with banks that don't favor startups. This leads to potential denials, even if you have good credit, unnecessary inquiries that you incur, lower approval confidence later on. So a better approach is knowing which issuers you should apply with, and that's what we do for our pre-qualification review. What we do is we help you avoid issuers that don't approve younger companies. We focus on banks that lean more on personal credit, not on the age of the business, and applying only when limits make sense for the stage of the business. That way you build your profile instead of damaging it. Now remember, these cards only report to the business credit bureaus. They don't report to your personal credit. So that's something you also want to factor in when it comes to applying on your own. There are cards that you don't want to get that report to your personal credit, and we don't acquire those for you. If your business is in pre-revenue and you're unsure what limits are realistic right now, a pre-qualification review can help you avoid those particular mistakes. So definitely check out this link to start your pre-qualification review. The link is in the description. Remember, high-limit business credit cards aren't random. They come down to comparable credit, existing banking relationships, the age of your business. These are the top 3 factors we talked about in this video. But just knowing these factors aren't enough. How you apply matters just as much as whether you apply. Before you submit another application with the bank card issuer, start with a pre-qualification review so you know your total credit limit projections. With our process, we know which cards to apply for you, which issuers to avoid right now, and the correct sequence to maximize your credit limit approvals. To start your pre-qualification review, click the link in the description. There's no hard pull, no guesswork. And if this video helped you, subscribe for more business funding and business credit strategies. I'll see you in the next video.